Hey guys, welcome back to another video. I know it's been a minute since my last upload, so my apologies on that. I was walking my goldfish and vacuuming the lawn. But now that I'm back, I want to show you guys why I believe that supply and demand is the best trading strategy of all time, and how you could use just supply and demand to trade last Friday's market almost perfectly. Now at market open, we can see that ES Futures, which tracks the S&P 500 if you didn't know, was rejecting supply right here before the market even opens. With the price action that is presented in front of me, I am more bearish than I am bullish. So with this market context, what I would be looking for is strong selling at open, or we get a small pump and then aggressive sellers come in very quickly and bring price down very quickly. For this thesis to be valid, we would need sellers to come in almost instantly because we're rejecting supply right here. Okay, so if we do pump, we would need sellers to come in almost instantly. Okay, and if we stay in supply for a couple minutes, that will show that buyers are very aggressive and we could see a move to the upside. Keep in mind, if we do come into the supply zone right here, we'll be above pre-market highs, which is more bullish than it is bearish. So what I'm gonna do is hop over to TradingView and let's play this market in real time and see how price is moving in front of us. So market opens, the first minute we see a big pump, which is good. This is exactly what we're expecting. Right now, what we would want to see is sellers coming in very aggressively right as we tap this supply zone, or right here. Okay, so ideally we want sellers to come in very aggressively, and we'd want to see a wick like this. Okay, let's just say this is colored in. We'd want to see this wick right here. Okay, so let's see how that goes. Price coming in, we break above pre-market highs right here, and price is staying above this level right here, which makes me a bit more bullish than it is bearish right now. If we keep going, we'll see that sellers start to come in here, but we're seeing support at the same level that we broke out from. So we're seeing support at pre-market highs, which is more bullish than it is bearish. Sellers are not as aggressive and buyers are completely aggressive, and they're buying this and holding this level as support, which is not something we want to see in a supply zone. We'd want to see a flush and buyers just being completely obliterated in the zone, pause, but we'd want to see that in the supply zone. But if we keep going, we'll see that buyers keep on showing strength right here, and the likelihood of us breaking above the supply zone, even though we're just 5 minutes into this market, is very high. All right, so we keep going and bam, we break above this level right here. We break above it and we continue above it, which is very strong. This is something we'd want to see after a supply zone break, right? So we didn't have a couple prints above this level and then we flush, which would still validate the supply zone. We had a full break above it with strong volume right here. Okay, with strong volume, we broke above it with strong volume and strong momentum. This was the upside pivot for me, as this was a key supply zone. And if you know about key supply and demand zones, you know that if we fail to hold and price breaks the zone to the upside or to the downside, we will likely see the side that is more aggressive be in total control for the rest of the day, right? So 4100, we break above this key supply zone. This is my upside pivot for the day, and we're 10 minutes into the market. This shows that buyers are totally in control right here. Now, if we keep going, we see that we have a retest of this level. We pull back into this level and buyers are starting to come in from this candle right here. This is the exact area where I was adding my calls, and I knew that it was gonna be a trend day. So this pullback was the perfect opportunity for me to add my long positions, right? So I added calls around this 4097 mark with a stop loss under the zone being 4087, right? So my profit target was all the way into the next supply zone because we didn't have any huge sellers come into the market until this next supply zone. So my profit target area would be 4120 or 4119. Let's say 4119. So my profit target was 4119. I'm risking 10 points to make around 20 points, a 2-to-1 risk to reward. So if we play this, let's see how this trade worked out. And bam. So if you look at the 411 calls of SPY and see exactly where we would have added, we would have gone around a 93-cent fill, and we would have rode it all the way up to 1011 on SPY, which our profit target would have been hit around here. And that's a 96% gain from our average to the peak at our profit target, right? So this is potentially what you could have gotten if you got in full position right here and got out full position at your profit target. Our TP was smashed with ease, and this was the exact level where we found resistance. Okay, now you might be thinking, since price is in supply now, we should go short the market, but you got to keep in mind market context. We broke above this 4100 key supply zone level, and this was our upside pivot for the day. Okay, we knew that today is going to be a trend day, so you don't want to be fighting the trend. Yes, we could be finding resistance at this level, but you'd either want to go with the trend than against the trend on days like today. Also, it's just way too much work. It's so much easier riding the trend than it is fighting the trend. Okay, so prices and supply, this trade worked out perfectly. Let's get rid of this and let's see if the market presents another opportunity for us. Let me go to the 3-minute chart and let's see how price is moving right there. Okay, you can see this is the exact area we found resistance. Yes, the idea would have worked out, but in my opinion, buying the dips on an uptrend and shorting the pops on a downtrend is just so much easier, and you get a better risk to reward on that, right? So let's see how price continues to move. Okay, so we make a higher high right here, which 100% validates our trend day thesis. In your mind right now, you should not be looking to short anything. Okay, so we're looking for a break above 4135 for another leg up. Okay, let's see if we get that move or if we start rejecting. Okay, so the market's moving sideways. We're consolidating in supply at high a day. Okay, some key things I want to point out to you guys is, one, we're consolidating in the supply zone, which shows that sellers are getting more weak the longer we're in this zone. So the longer that we're in this zone, the probability of us breaking above it is higher. Okay, and 2, we know it's a trend day. And 3, I don't know if you guys can see this, we are flagging right here. If you can see this, we're flagging at high a day. Now, a trade that you could be looking to get into is along with the stop loss of a lower high. All right, we know that we're flagging. If we do create a lower high, we'll likely see more downside. So this is exactly a trade that I took around 4123, and then I risked this high right here. So I risked around 2 points on this trade. And you can have 2 profit targets. You can have a profit target of high a day, or you can have a profit target of the next supply zone, right? You know, it's a trend day. We're consolidating at supply at high a day, and we're flagging at high a day. With all this in mind, the probability of us breaking above this zone is very high. So this trade could really work out with a 12-to-1 risk to reward, right? But let's say you do get in at high day for a 4-to-1 risk to reward. Let's see how that plays out. So we break above this level, we break out, and our TP was smashed. But with all this in mind, I didn't have a profit target of high a day. I had a profit target of the next supply zone. So let's see how this trade turned out with the 12-to-1 risk to reward. We broke above this next supply zone right here. We'll likely see a move to 4150 supply, and let's see how it worked out. Bam, target smashed right here. Yes, your profit target could be deeper into the zone, expanding your risk to reward ratio, but I just did 4150. I'll first tap into the zone and then I was out, right? Going on the 1-minute chart, you can see that right as we broke this 4150 level, right, we got immediate buyers pushing price out. So we know that there are no big sellers until this 4150 level, and we could play this to the upside all the way till 4150, or take profit around 4146, 4148, closer to this 4150 level, scale out as you go up, right? Now, I personally took profits around 4147 right here because we're just 3 points away from the supply zone, and I don't want to risk my profits, and it was nearing end of day. We only had around 30 minutes left of the market, so I didn't want to risk anything too much, so I just took profits right there. Okay, which was still a solid trade, a 10-to-1 risk to reward. Going to the option chart for this trade, we could have seen that we would have entered at 1343, 1344 at this level with the stop loss of this lower high. So 1343, we would have entered around here, gotten around a 45-cent average, all the way up to 4147, which is around 1525. All right, 45 cents all the way to 1525 around here. All right, you would have gotten a 152-cent average fill for your exit, a 240% return on your investment on this trade right here, which is amazing. A 20 out of 10. First trade going 97%, the second trade going 240%. Yes, price kept running, but you would have likely not caught in this move all the way to the upside. But theoretically, let's say you did, from the bottom of our average right here of 45 cents all the way up to the top is a 540% return. Yes, this is almost impossible to catch the bottom and the very top of a move, but this is the potential of what you could have made using supply and demand. Now, the only loss you would have taken using supply and demand on a day like today was going short the market at open, which I did right here, okay? Which, looking back on it, I should not have done this, but this is something I did. I entered a short around here when we came into supply. I didn't see signs of aggressive selling right here, but I preemptively entered this trade, which is something I should not have done, okay? I should have waited for sellers reacting to this level and then bringing price down and then entered the trade. If I had done that, I would have never gotten in this position because aggressive sellers didn't come in. It was just aggressive buyers all throughout this morning right here, okay? So I would not even enter the trade if I had done that, right? But hey, hindsight is always 20/20, and that is one thing I will take into account while trading in the future, right? Entering a position after confirmation of sellers in supply or buyers in demand, right? Looking at my clock, I think we're nearing the end of this video. So thank you guys so much for watching. I hope you learned something new from it, and if you did, I would greatly appreciate it if you left a like. Subscribe if you're new to the channel. Comment any questions down below that you have, and I'll see y'all in the next one. Peace.